Hey everybody, Hans Albrecht here. 15 years as a pro options market maker, then 10 years managing a whole bunch of income funds, downside protect funds, using options to generate about $750 million for investors, members, etc. around the world. Do me a big favor, please sign up below and then grab those ebooks. Those ebooks are not crappy giveaways. I want to give you the good stuff. Grab those and I'm going to get you on my mailing list. And also you're going to get regular updates on what I am seeing out there in the world of options, but smartly, right? We are doing things always looking for edge. So you've heard me talk about the melt up, the AI revolution. It's going on and on and on. Today, we're going to zoom in on one of the quietest, most critical pieces of that puzzle, which is memory. Without it, AI inference is not going to work. And there's one company that's actually sitting right in the middle of this. It's called Micron, and it's trading at basically the same forward PE as its 10-year average. That is exceptional. We're going to compare that to another very prominent stock. So even as demand is exploding, as we see the demand starting to do something very kind of exponential, I believe, we are seeing this thing trade at reasonable valuations. So let's talk about why this is a sleeper opportunity. As always, this is for information and education purposes only. If you want to keep watching, it's your trade, your responsibility. And so let's keep going. When AI inference takes off, and that's what I think people aren't quite understanding, is that we've gone from this training phase to the inference phase. Data centers are going to need three things: compute, bandwidth, and memory. GPUs like NVIDIA's get all the headlines, but memory is really the workhorse. It stores, it retrieves, it shuffles all these massive data sets, inference requirements that we have. The DRAM demand is expected to grow from about 84 billion in 2023 to nearly $450 billion by 2030. Massive, massive potential growth, massive total addressable market. That's over 20% of annual growth, and Micron is a leader here. So think about that. Every chatbot query, every AI video, every transaction is going to rely on fast, efficient memory. Without it, these GPUs are going to choke, right? Memory, just the same way that AVGO is very important. It's kind of the spine, the nerves, bringing together all these pieces. Memory is another very, very key component of that. And it's a very big bottleneck that needs to be addressed. That's the big opportunity here. So I want to tell you about how this works. So the training phase versus inference. Training uses tons of compute, but it happens in the data centers with these giant setups. Inference happens everywhere, right? So think of one and done as a kind of training approach, whereas inference is just the gears turning constantly. It happens everywhere in data centers, and edge servers, even phones. We're seeing Qualcomm start to move. We're seeing edge compute starting to take hold a little bit. I think Apple's one of the great names there that's going to benefit from that. And this just keeps happening. It does not rest, right? Inference does not rest. That's what we saw from Oracle last week. Absolutely off the charts, bonkers demand. They said basically people are calling them up and begging them to do business with them. It is absolutely insatiable. So if you think this is near the end of some sort of AI phase, you've probably got it wrong. This is really near the beginning. So as these AI models start to double and triple in size, every query is going to need more DRAM to fit and run smoothly. High bandwidth memory and advanced DRAM are essential for those GPUs. And Micron is just one of those handful of companies on Earth that can manufacture it. This is why things are getting very, very interesting. And right now, Micron trades around its average forward PE of the last 10 years. So Wall Street is kind of pricing it like a boring old memory maker, not like what it is, which is a key supplier to this AI revolution, right? We've seen some stocks just suddenly go bananas to the upside as people start to realize that they're getting it wrong. So it is a very underrated role. Nvidia, AMD, they get all the headlines, AVGO, Micron is a key. And as inference scales, demand for those DRAMs grows almost exponentially. So this is really, you can think of NVIDIA as the rock star of AI, but look at the difference in valuations here. Here's Micron trading right around its 10-year average, really not getting the love that, for example, an AVGO is getting. This is an unbelievable company. Without AVGO, without Broadcom, data centers don't exist. So there's no question this is a powerful thing. I think this is a little bit overextended, right? NVIDIA is actually trading a little bit less expensively versus a 10-year average. So I think that's a very interesting one as well. But they've got some issues with China, and we've got some competition coming out there from hyperscalers themselves. So some questions there. But this is a very interesting stock. So let's take a look at some of the option pricing. Check. Okay. All right, so SPY, we can see just a broader kind of skew happening here. So what this means is when you see these spikes here, this is when puts get very, very expensive versus calls. Of course, that's naturally what you'd see in a big panic as people reach for those downside puts, right? They're buying protection, they're buying house insurance while the roof is already burning. So then everything calms down, and here we come. The SPY never gets inverted, meaning the calls are almost virtually never more expensive than the puts on an IV basis. So we can see that it tends to bottom out here. So we have come off, right? We had a bit steeper skew for a little while there, and we've come off a little. And so it's kind of a sort of a typical look, which is a smirk. We call this a smirk. So that's going to differ from some other kinds of products, but I'm starting off by showing you the market because I want you to appreciate that there's just a little bit of exuberance, right? Part of that overall SPY skew is the fact that calls have kind of pushed up a little bit. So remember, it's a relative relationship. It isn't always because the puts are only coming down. It could be also because the calls are coming up, and we know that to be true from all the things that I watch. We know that there's a little bit of exuberance, and this is part of what I've been saying for over a month now. I've been saying this market is underpricing the potential for big explosions to the upside, which is why we've been getting members into some of these longer term plays. Let me show you Amazon, for example, just as a quick learning moment before I get to Micron. Now, here's Amazon 60-day. Now, 60-day, you got to be careful because that's starting to incorporate the earnings, right? So naturally, we're going to see a little bit of a bump. It's more pronounced than the 30-day. But what I wanted to show you really is some of these longer term ones. And this is a very interesting sign to me. Look at how we are now seeing a bump up. Let's get rid of this historical vol and even the rank and percentile. We can see, look at this. This is back when I said this is not representing what could very much happen in this market. And I did show folks weeks and weeks ago a chart of how the inverted skew, which means call skew showing a bit of excitement and FOMO, starts to work its way into manias. We are starting to see that happening. That is it's early. I would wager to say that it's early. We are due for a little bit of a pullback in a couple of things, but I would wager to say that we are early in terms of the mania that could actually unfold here. And we're starting to see this longer term pricing start to reflect the reality that AI kind of changes everything, right? It's going to help a lot. It could hurt a little bit here and there, and it's going to bring in the possibility that we don't really know where companies should be valued. We don't really know where the companies are going to have advantages. We know for sure, which is why we've been in things like Goldman Sachs, my biggest position. We've been killing it in that stock because I know that they are going to be one of those very, very key firms that picks up on the efficiencies and the productivity very, very early on, right? Finance just does that, right? All the banks are doing well, so they're all doing well. It's not just Goldman, but Goldman is that very unique place that's going to also have that exposure to deals and IPOs and all that extra yummy stuff that we're going to get from AI. So, skew's starting to pick up, starting to get a little bit excited. So let's take a look at Micron. So we've got Micron that had a little bit of a pullback today, and I think this represents a very, very interesting spot to get in. Look at this. Look at how Micron is starting to represent, right? I've been getting into positions in here, and here we are jumping up. Now, that doesn't seem like much for vol points, but on a one-year option, that's a pretty good amount of money in terms of that vega that you've benefited from there. And so I think it's starting to normalize a little bit and in fact start to get a little bit more excited, which I think completely makes sense. Okay, so here we go. Here's this beautiful, beautiful breakout. This is part of that vol starting to pop a little bit. And I think there's a very good chance that we could see that that valuation push up. And so my target is kind of 220 to 230, which I think is actually very, very reasonable over the next year. And so if I start to look out, I think, we could get if we get a little bit of a pullback in the market, I think there could be a very nice green light opportunity in terms of playing that upside into the end of the year. But having said that, if I've been adding positions, I would consider something a little bit shorter term if I wanted to do a call spread, because now we're starting to see that skew get a little steeper. So I think call skews are starting to look a little bit more favorable, right? So if we look at at that skew on Micron. Look, this is your typical sort of non-excited upside. Now it's starting to get a little bit excited here, right? So those are going to price nicely. So in Leaps Trader and things that in the programs that I have, we're going to start looking at some of these ways to price things better, right? You want to take advantage of some of the sort of internals, volatility internals and pricing internals that we're seeing out there in options, right? You want to take advantage of something's really, really expensive, but you're going to set it up so that you're long into that. In fact, I think at this point, it's not really part of Leaps. We do things like this in the Discord, but I think at this point, you're setting up for actually quite a very nice broken wing upside fly, right? So, and I love those plays as directional plays that are long delta, short Vega, right where you want that volatility to come down a little bit because it's a bit risky. And then it's got that's almost like what we call like a Vega Vama, which is like sounds terrible, sounds gross, but it's basically the ability for Vega to adjust, and so that basically is going to show a sensitivity of this to kind of kick up. Now, some of that has already happened, right? But you're going to have that delta. You're going to have that Vega, and off you go. So there's a few different ways to play this. I think you could very much get into like a call spread that plays some of this upside skew. So you could buy like a 1020 with the 175s, buy like a 1020 and sell maybe a 200. You get that on for about $6. That's not bad. Really kind of sort of risk to reward on something that really has momentum and has a great story, right? Because I think at this point, you got to understand that we're starting to see a reversion of a catch-up trade in some of these valuations, right? You see that in Google, and we're sort of having these stocks that are kind of under the radar a little bit. Micron has, even though it's had a good little run, it's a little bit under the radar because people don't realize that more demand for inference means that the demand for DRAM grows almost exponentially, right? And companies have been moving away from the DRAM to sort of look into to kind of focus on other things. But really, the point is GPUs cannot shine without DRAM. It's kind of, think of it as almost like having like the GPU has like a backpack with memory in it, right? Because inference is all about crunching, gears turning constantly. It never stops. It's always on, in a sense, versus training. And that means that you need memory to kind of keep track of things. Like, it's like you trying to figure out a very, very complex mathematical problem and you have zero memory. You're not going to remember what you thought 7 seconds ago or 10 seconds ago. It's impossible. You're not going to get anywhere. So memory is very much a part of the data center growth and the way that GPUs work. So very, very exciting stuff from those guys. And as a final sort of idea, I think, even though it has gotten a little bit more expensive, and if the market does kind of settle down for a bit for whatever reason, there is a little bit of Vega risk there. But I would say you could sort of look at something like a CEP26, which is kind of right at that 1 year mark, where you could pick up some, 200s. These have gotten just a little bit more expensive. I was buying these at a lower implied volatility, but you could pick up something like this, like a 200, that could very easily turn into sort of $50-$60 if what I think transpires actually continues in this mania. So hopefully that helps you guys. And check out Leaps Trader. We closed a bunch of trades. Goldman Sachs, we actually closed a trade for 240%. 270% today. But that's real money. We turned a $3,800 contract into $13,000. So real money, not just turning $1 into $1, into a couple bucks. Like these are trades that are meant to really kind of move the needle a little bit higher capital involved. $3,800. That's not buying a $500 call, but we have these trades that give us the ability to wait. We closed SoFi for 240% today. We closed Zillow. We closed Upwork. We had Upwork and Fiverr trades that are up 80 and 100%. And SMR, NewScale, which is a power play, that up 80% in a week. So we've got some great stuff happening out there. Look, it's a bull market. We're enjoying it, but we're in all the right places. So I hope you enjoy that, and we'll see you in the next video.